How are you doing today, man?
Hey, how's it going, man? How's everything?
It's going well. It's going well. It is a Friday. It is a quad and witching day. It is an S&P rebalancing day. But all things considered, I guess I don't know what my expectations were, but it seems to be rather quiet out there. What are you seeing out there?
Yeah, interesting market with some of the flip-flop that we've seen in the S&P. I've got a position I need to manage when we get done. I've actually been teaching all day today for our high-level coaching groups. Literally just got off with them now. We did a couple of trades inside of there, but overall, it's just interesting. Comes to Friday, right? If we're closing where we're at right now on the S&P, I'm not sharing my screen there. Is it okay if I share it?
Yeah, go for it. Let's bring it on.
I know it's always a process of which screen when you got 6 monitors to go through. There we go.
I know it. Don't I know it? There we go.
All right. So if we're looking at S&P 500, if we close where we're at, I don't want to say concerning, but we're underneath the 8 moving average. The pink line is an 8 exponential moving average. We have got to get that close back above there. Whether it's today or Monday, if we stay down here now for the weekend, we've got the potential of going back to that 3,900 as we did today. And you can see where we tagged. We went to the 3,900 confluence of the 21 moving average. We went to the 3,890 level, which is where our fib level is, the 236. For those of you that are not familiar with Fibonacci, write these words down. 0.236 equals hesitation. It is a hesitation level. I just want to see us get back above the 8. So give me up somewhere about that 39.30 level as a close or higher today, and it would make me very happy. But I'm not disappointed. We had a good run the last week and a half. That pullback is necessary. But after yesterday's thrashing, I would like to see a little bit of a move up and not deadheading at the resistance level of the moving average. But overall, looking good. So hope everybody out there is doing well.
For the most part, yeah, I think so. I mean, we're green, are we not? That's a good sign. We're green, though we are still in the red for the week.
Yeah, the Dow is down on the day, but S&P is up, NASDAQ is up, so overall that's good. I've got a long-term Apple position, a little underwater on it still. Came back a bit after the retracement it had, but so definitely I'm happy to see the NASDAQ up considering where it was. So overall that's great, but I really want to talk today about there's a strategy called renting out your stock, and it's known as something called covered calls, right? Covered calls is the name of the strategy. So let me go ahead and do this. Let me go grab comments so I could see what's going on there. And there we go. Perfect. So basically what we're doing is this. If we go ahead and find a stock, and I know a couple weeks ago when I was on the Power Hour with Luke, we were talking about, or he had just got done talking about Ford. Ford, right? I'm a big fan of Ford. I've had it for a little bit now, but I'm not just holding it. I didn't buy it at, let's say, $12 and now it's sitting at $12.80. I'm like, yes, I'm up 80 cents a share. No, I want to go ahead and rent that stock out. I want to collect rental income. So here's the first question I have for you guys. Don't put it in yet because they'll get lost in the comments. But if you have stock that you own, but you have to own at least 100 shares of the stock and or 100 share increments, then I'm going to want those ticker symbols. But just if they're the very small, $2, $3 stocks, we may not find anything on them. But if they are, a stock that has some meat to it, that's got some shares traded on it every day, there may be a way that you can collect rental income on that stock day after day, week after week. I rent them out every single week. Ford was rented out for next week. I closed the position out today and rented it out again now for the following week, right? So every single week I'm renting it out. Think of having a house, right? If you have a house that you own and it's a rental property, not where you live, right? You're not going to buy that house and say, well, I'm going to just wait for 10 years for it to appreciate in value, and then I can make some money on it. No, you're going to rent it while it appreciates or goes down a little bit. It doesn't matter. I'm going to rent it out. I'm going to collect some income, and I want to do it weekly. My goal is 3 to 5% a month. If you're only able to get 3, now I'm 56 years old. As I get up to closer to 60, 61, I'll probably drop down to 2 to 4% because my risk tolerance is different, right? At that point. But if my goal is 3% a month, can anybody tell me how long it takes you to double your account If you're able to generate 3% a month, how long does it take you to double your account? Yeah, guys, I'll look at the candidates in a little bit. Taylor, I don't know if that's a good thing. Wow, he's only 56. Good, Hertz. Grammy, you sold some covered calls. Guys, there you go. Harry, you got it. You were the first one in. If you are able to make 3% a month, you will double your account every 2 years. It's called the rule of 72. Look it up if you're not familiar with it. Rule of 72. It's about compound interest, right? I want to see 3% a month because I know, and I don't win every month, of course, but if I'm able to generate 2% a month, 3% a month rather, I can double my account in as little as 2 years, right? And if you think about it, that's 36% a year without compounding. That's a straight 36%, which you are blowing away the S&P 500, renting out these little stocks like Ford, right? So basically, you've got to find a stock that you don't mind owning, right? Because you're going to have to purchase the stock. And take some notes on it, folks. You need to buy the stock in 100 share increments. That's the key, 100 shares, right? So that's the first thing. Next thing is we need to take you into an option chain. We'll put in Ford. F is the ticker symbol, right? I don't need to have that many open. Some of you are looking at this for the very first time going, oh my goodness, this is freaking crazy. There's so much stuff up here. Don't worry about it. I'm going to break this down to you in just very few columns that you have to deal with. Some of this you already know about, you just don't know it, right? Here's bid and ask. If you're trading stocks, you know what that is. Midpoint is nothing more than the center of the bid and the ask. That's it. We have options expire. I'll close all these up so we can see them. Options expire. There are weeklies on Ford. So you can see this one, the 19th expires today, right? The 26th is in 7 days. The 1st of April is 13 days and so forth, right? You can see all of the expirations in there. I love that Ford has weekly options on it. That's a tremendous thing to me. If it did not, you would only see these monthlies. Nothing would say weekly, and this is TradeStation. Your broker may look different. But I'm going to look at next week's options, right? And if I am okay with Ford, let's say I'm willing to buy it at $12.82, right? And that's what the cost per share is right now. What I'd be looking for next week is I would be looking at selling the $13 call option. What does that mean? Well, what that represents is this. If I were to go ahead here, you know what? Let's do it this way. Let's grab a notepad. It'll open up somewhere for me. Here we go. If I BTO, buy to open the stock, Ford at $12.80. Good, nice round number. Right, and then I sell to open STO. B, what date is it? 3/26/13. C for call. It is the call option. Notice on the left side you see calls here, right? That's the call option, right? So what are we doing? We are going to get paid 27. Well, we'll use the mid price, 27 cents. Let's do it this way. 27 cents, 0.27 per share. Right? So what did I, in essence, allow to just happen right now? I went ahead and said, I'm going to buy the stock at $12.80 a share. And I'm going to turn around and rent it out to somebody. Well, Rob, who's renting it? Don't worry. It doesn't matter. Who cares who it is? Right? You've got an online store. You sell stuff on Amazon, and somebody buys your widget, whatever it is, your pen. Okay, you're not standing there saying, who bought it? Who cares? It's done through the market. You have nothing to do with it. The market maker takes care of it through the broker, piece of cake. You then took on the obligation to sell your stock at $13 a share. You see the strike price right here, 13? That's what these are called, the strikes. That is the price you agreed to either buy or sell the stock for. Right? And if you are not familiar with options, guys, I'll send you somewhere later that you can go learn more. But you can also go back to last week's show that we did where I actually went over how options work as the basics of calls and puts. So definitely worth checking that out. But you are taking on an obligation to have somebody take your stock away at $13 a share. And they're paying you 27 cents a share to do it for. So wait a second. If I went ahead on this trade and I just look right now, let's grab a calculator. See, it's up here. So let's say that I buy my stock at $12.80 a share and I rent it out for 27 cents. So the formula that we're looking for is this. It's cash in over cash out. Cash in is the cash that's in my pocket. How much did I get paid? Right? So if I am going to get paid 27 cents a share and I'm going to divide, oh, I don't want to do that there. I thought it was here. 27 cents a share divided by 12.8, right? That gives me 2%. Are you okay with 2%? For a week. For a week. That's what you're making on this trade. So good question, Matt. Where did the 27 cents come from? We're looking at the point was the mid price was 27 cents. It's now changed to 27 by 28. But so we're going to get the 27 cents off of the bid and ask. And let me make it easy, Matt. How about this? I want you to look at the bid and the ask, and I want you to tell me, all of you, think about this. I'm going to give you a choice. If you were selling this option, would you rather somebody pay you 27 cents or 28 cents? I know your answer. It's going to be whatever the most money is, right? No, pay me the 28 cents. All right. So you'd rather get paid the higher amount. Got it. If you wanted to buy this option, would you want to buy it for 27 cents or a share of stock? It doesn't matter. Or would you want to buy it for 28 cents? Well, Rob, I want to buy it for the lower price. Got it. So you want to buy it for the lowest price and sell it for the highest price. Okay. Here's the way it really works. I want you to look at bid and ask. Whether you're buying and selling a stock, it makes no difference. Look at the bid and ask and say, which one do I want? And once you know what one you want, then here's the answer. You can't have it. You always get the one you don't want when it comes to bid and ask. I want the 28 cents. Sorry, can't have it. Get the 27 cents. That's how it comes through. All right. So what we would do in this scenario is this. Now, by the way, you guys good with a 2% weekly, 8% for a month on this trade? I don't know about you, but I'm in for it now. I'm renting it out every single week, right? Hint, 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 right? You do the way you choose to do, right? So, and I am renting it as short of time as possible next week. I'm not renting it out for weeks and months after that. I'm renting it out right now. What's happening right now in the market? I'm renting it out now. So if we look at this right now, what happens here? What's the worst case scenario? If I sell the stock, I'm going to sell it at $13 a share. That means my stock profit is how much? 20 cents. That's an easy one, right? And that's per share. Remember that. And we have 100 share increments that we're looking at here. So you would make $20 on that 100 shares or $1,300 of stock, right? So now what? Now what happens? My option, I make the 27 cents no matter what. That's my money to keep. So realistically, per share, I'm going to make 47 cents on this transaction. So now what happens? To do this trade, if I made 47 cents and I divide it by 12.82 or 12.8, which was the cost of the stock, we're now looking at 3.6% is what I made for a week. For a week. But Rob, they took away my stock. So what? I'll do it on another stock. I don't care. Now, if you think Ford's going to skyrocket and go to $20, maybe you don't want to do this on that stock. But to me, Ford's had a great run at this point. It's going to go higher, but I don't think it's going to skyrocket to $20. I'm okay renting the stocks out. This, ladies and gentlemen, this is retirement portfolio. These types of strategies, which are selling strategies, are what we use in our portfolio, what I use in my portfolio. This is mine and my wife and my kids. This is what our retirement accounts look like, is these strategies right here. I'm a tremendous fan of it. I taught this morning. I had a 4-hour training I did with one of my groups of students, and I had to get, and we started at 10 o'clock. I had to get my trades done first thing in the morning today. Normally I manage all my trades throughout the course of the day. So I went in and took all my covered calls. I managed all those positions out. I spend about an hour a week managing my trades. I've got alerts set up. I'll get a text message to trigger me of something that just happened. But overall, when it comes to the strategy, there's not a lot of work involved once you learn how. Once you learn how to do it, right? That's really going to be the bottom line for you, is getting good there. All right, so let's see. I find 30 to Webcoin. I find 30 to 60 days out pays 5%, 6% a month, and you can get a much lower strike price. I guess it's a balance of risk and time. It is, because we've got so long in there, Webcoin, on how long for the stock to move. When you are selling, here's the rule. All right, and I've been teaching this from 1997 is when I learned it, and I've been teaching since 1999 and trading it since 1997. When you are a buyer, you buy as much time as you can afford. When you are a seller, you sell as little time as possible. That is how selling should be done when it comes to options. Is it normally better to sell on Friday before expiration week, but lately the Mondays have gapped up? So Fridays, it's better. The benefit of a Friday is this. And if you understand what's called theta, and here, if you don't, let me give you a quick history of it. Theta starts with T. T stands for time. Theta is time value deterioration. You're going to have a deterioration of time in your options price. Well, that's good if I sell it, if I'm a covered call seller. If I'm a buyer, it's not so good. So yes, it is better off to do that on a Friday, so that from Friday afternoon to Saturday afternoon, I get 1 day of theta burn or theta loss. From Saturday to Sunday, I get another day. And from Sunday to Monday, I get the majority of a day. So I pick up 2 3/4 days of theta burn, which means the value of the option dropped over the weekend just because time passed by. Theta starts with T. T stands for time. Theta is the time value component of an option. Very important to do that. Now, with that being said, that doesn't mean I don't trade them on a Monday. I do them all the time. Yes, Elliot, I would give up the stock if that happened, without a doubt. So Jared said, Rob, what do you do with a smaller account for stock? Might be high for some accounts starting out. Well, then we do a different trade called a diagonal, where I use a proxy as the stock and I buy an option instead of buying the stock. So I did that with Telray as an example. I bought a long-term option on Telray and sold a short-term option against it. Not a strategy we're going to teach today, but that's the way to handle it. Correct. And Billy said you only give up the stock if it gets to the 13 strike and someone buys it. So if expiration Friday, today, if the stock closed at 13.01, you're guaranteed to have the stock taken away from you today. If today was the expiration, you sold. If it was next Friday and it closed Monday at 13.01, doesn't mean the stock's getting taken away. On expiration day, you're guaranteed to be exercised if you're 1 penny in the money, meaning 13.01. You've got what's called intrinsic value. It's the cash value in an option. You're guaranteed they're going to take it away from you. But there are management techniques. If the stock went to 13.01, I'm going to trade the option. I'm going to get out of the option I'm in. If I sold it originally, sell to open, how do I get out? The opposite. I buy to close. I would buy it back. Maybe I sold it for 27 cents and I got to buy it back for 30 cents. But I don't give away my stock. And now I go ahead and I sell a higher strike price for the next week. There are management techniques to covered calls. There's a lot involved with them. It is not a strategy of, oh yeah, let me just do this. You can, but if you really become good at them, I mean really, really good at them, you can crush it on these. The diagonals that we're talking about for the smaller accounts, I use them on the bigger accounts, guys. I do it in something that I have called Covered Call Explorer. And inside of that system, my goal is not 3 to 5% a month. My goal is more like 5 to 8% a week on a diagonal. Although I don't normally do them on low price stocks. I do them on stocks upwards of $200, as high as $200. All right. Poor man's covered call. There you go, Big. You got it. Yep. Danny, you too. Poor man's covered call. It's exactly what it is. So Cameron said, can you explain the hesitation level a little bit? Sure, Cameron. So basically, on a Fibonacci chart, this level, the 236, is known as a hesitation. So if I go ahead and switch this over to a template with no moving averages, just to make it as clear as possible for you, right? Here's my bottom of my Fibonacci. Here's my top, right? We pulled back off of there, and I couldn't draw the Fibonacci until we got the pullback. Well, look where we closed. We closed right at that 236. We hung around it the very next day, right? That is why it is called a hesitation level. We tend to pull back and hesitate there. Doesn't mean we're staying there. Doesn't mean we're going down. Doesn't mean we're going up. We just are slowing down at that level. And you will see, look, we hesitated here, 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 bop, 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 over and over and over and over again. All right. That's what a hesitation level is. Good question, no FOMO. What delta do I use? I normally am at a 40 delta is what I'm looking for, not over. I really want it to be 40. With Ford, we didn't have a choice. There was either 7 or 43, I think it was, or something. Thanks, Ash. I appreciate that. Just sold a GM call. All right, so watch. Give me some symbols, guys. Give me ones to look at. Come on, talk to me. Yeah, I'm not going to do that and sing to you, that's for sure. What symbols do you want to look at? I am not analyzing the stock. I'm analyzing it as a potential covered call trade. Covered calls and secured puts are the two best option strategies known to mankind. You might be right there. Let's see. WRTH. WRTH. They are not optionable.
WTRH.
WTRH. Thank you for that. Yeah. WTRH. All right. So you see they are not weekly. You can sell them. I won't. But you can sell covered calls on them. We look for a delta of about 40. It's a very low price stock. So it's a $3.50 or $2.81 is the stock price. I can let someone take it away from me at $3.50 and they'll pay me 18 cents if we go with the mid price. All right. So I get 18 cents a share on this. Not bad considering the cost of the stock. I mean, I'm spending $2.81. That's really not bad at all. Let's see. NEO, NIO. I saw that one in there. Slip away. All right. Notice it has weekly options. I like it much better automatically. It's also a higher price stock. Just to give an FYI, for me personally, I normally don't write covered calls on stocks above 40. And we'll call it 40-ish. If they get above 40 is when we go to that poor man's covered call, that diagonal, whatever we want to call it. But using this as an example, and the reason is, so you know, it's all rate of return. That's what it comes down to, is how much can I make? When you get in those higher price stocks, it's harder to make the bigger percentages on a weekly basis or even monthly. So if I'm looking here, I could buy this stock at $43, we'll call it, and I can rent it out for 95 cents. Right? 94 cents, 95 cents, right? Let's call it $1 to make it real easy math. What is that? About 4%? If I'm able to take in $1 and I'm going to spend 43, 2.3%. 2.3% for the week on NEO. I don't know about you, but I'm okay with that. SAIC is the next one I see. Monthly options, not a fan of it. Automatically. Here's another one. You see these, how big the strike prices are? What's called the difference between the strike prices there? 75, 88. It's a little bit big for me. So this week works out okay. You can get a decent premium on it. And listen, if you're sitting with 100 shares of stock and you can sell this for $230 for the $100 strike, by all means, go for it. Right? Well, Rob, I don't want it to get taken away. Can I go higher? Sure. Go to the 105s and let someone take it from you at 105, $9 higher than it's trading at now, and they'll pay you 95 cents. Again, call it a buck. Right? Give me a buck. Give me a buck. Buck. That's 5%. 4%. Right? It's great premium. It's just a little far away for me to have to wait 28 days to get there. For me. American Express, AXP. A little high priced, $141. definitely better off on a diagonal. I've got to, now if you own it, whole different story, right? If I own this, I'm selling the 143 at $1.43 a share. If you have, here, watch this. You ready? If you have $1.43 and you can times 100 shares, right? Because it's worth, one contract controls 100 shares. That's $143. If you had 1,000 shares of stock, that's 10 contracts. That's $1,430 a month. If you multiply that by 12 months, that is well, wait a second, Rob, that's not right. Hold on a second. Oh, we're wrong. Darn. You're not doing it for a month. You guys didn't catch me. All right, watch. If you're able to make $1, right? Or what do we say? $1.43, right? Let's just say $1.43 times 100 shares. So basically you're getting $143 per 100 shares. If you had 1,000 shares or 10 contracts, that's $1,430. That's a week. That's a week. Let's go ahead. Let's not do 52 weeks. Let's do 50. You deserve 2 weeks off vacation, don't you? Let's just say you do 50 weeks. That's $71,000 a year if, not that you will be able to, if you're able to generate $143 per week on American Express. By the way, if you've owned American Express now for the last 5 years and you haven't written it, that's 7 times 5. That's $350,000 that you didn't collect, but your broker did. Because the broker, not your individual broker, the back office will rent your stock out. You give them the right to encumber your stock anytime they choose. Right? Folks, this strategy is killer. Now, if I owned American Express, I'd be looking to rent it. If I don't own American Express and I'm considering it, I wouldn't buy that. The stock is way too expensive for a covered call. I would look to do a diagonal trade instead, right? Would I do covered calls on expiration day? Absolutely. If I could get any money out of it today, in a heartbeat, there's just not enough premium. Remember that 40 Delta? I can't even get it today on American Express. Can I get it on Telray? I'm not saying Telray is a good trade for this at all today. Can I get it on Telray today? Well, yeah, if I'm willing to go ahead with the $26, let someone take it away at about 60 cents higher than it is now, they're going to pay me 8 cents. It's 2:30 in the afternoon on a Friday. It expires in an hour and a half. It's tough. But yes, I will. In the mornings, I do it all the time on expiration day. If the premium is there, I'm all over it. I am all over it. Danny said, can you put your stock for sale at an extremely high price to prevent the broker, where'd that go, from lending it out? No, doesn't matter. It's their stock. You let them have it, and there's nothing you can do. Let's see. Yeah, easier said than done. What if it skyrockets? You tend to lose on your original position too. Well, options look easier on paper, but can't just walk away with it every week, especially while writing. Well, Garrett, I'm not sure what your experience is. I can tell you this. From my personal experience that I've been writing covered calls every single week from 1997 till now, yeah, you can set this up. I spend about an hour a week. And that doesn't mean I don't check my positions. That doesn't mean I don't have trades go against me. It happens all the time. It's called trading, not winning, period. But a blanket statement of easier said than done might be for some, and that's where the experience and the practice comes in. And just because someone's been trading these for a while doesn't mean they really understand them either. A lot of people are self-taught and really, they're following some 14-year-old on YouTube that doesn't have a clue about this. That's why Benzinga asked me to come and teach on options, because I came in for a couple of shows in the morning and they're like, yeah, we need someone that knows what they're doing about options. You're it, right? Actually, Jason had to cut out for his meeting today, right? But on one of the shows, he wanted me to help him walk through an actual covered call trade where we placed it on his portfolio. He was going to place the trade while I was walking him through what to be looking for and what to do, right? So the money is to be made there with options, guys. You can make serious money. I mean, students that are in my inner circle, right? There are some that are doing phenomenal in there, right? Why? Because they learned a system and it's rinse and repeat. You do it over and over again. Do they get burned? Sure. Some of the free trainings that we do on our website, we do a training on Monday at noon. It's called Power Hour. Ironically, I've been doing it for about 8 years now. And in that training, we had someone come in there a couple weeks ago that's, oh yeah, this week I got crushed. But the previous month, with what he made the previous month, he was well ahead of the game. So are you going to have weeks go against you? Yep. Are there trades go against you? I got them right now. I have trades that I own that I'm underwater on them, right? But covered calls, not for everybody, but a phenomenal strategy in my opinion. If you think the S&P does it for you and you're going to just put your money in that and let it go, or you're going to put your money in mutual funds and just walk away and think that is the way to go with what they charge in fees, right? That's where the problem comes in. Right? That's where it gets expensive, is when you use mutual funds as a way of building wealth. That's why the average person, when they hit 55 years old in this country, has $55,000 in their retirement account. That's why. Because they're relying on mutual funds. You need to learn how to do this on your own instead. All right, guys, it looks like I'm running up to the top of my time here. Listen, go check out Ford. All right, go check out American Airlines, AAL. Go check out CCL, which is Carnival Cruise Lines. These are all great covered call candidates. Make sure the stock fits your risk profile, and you make the final decision on the yay or nay. Is this one good for me?
Robert, guys, smash the like for Robert. Come on. Let's go. Let's get those likes up. Smash the like for Robert. The link is there on the bottom of the screen, WealthbuildersHQ.com. Robert, you know your stuff, all right? You definitely can't say you don't know what you're talking about, because you know what you're talking about, all right? So we appreciate it. Happy Friday. Hopefully the last hour and a half treats you well. It's good that we had you on a quad witching day. We'll have to talk more about that the next time we do this. And thanks a lot, guys. Smash the like for Robert Roy. We appreciate it. Thanks a lot, man.
Cool. All right, guys. Take care. See you next week.
All right.